India's economy has demonstrated resilience despite a challenging external environment, says the World Bank in its latest India Development Update, a World Bank flagship publication. The report, titled Navigating the Storm, finds that while the deteriorating external environment will weigh on India's growth prospects, the economy is relatively well positioned to weather global spillovers compared to most other emerging markets. Impact of a tightening global monetary policy cycle, slowing global growth and elevated commodity prices will mean that the Indian economy will experience lower growth in 2022-23 financial year compared to 2021-22. Despite these challenges, the update expects India to register a strong GDP growth and remain one of the fastest growing major economies in the world due to robust domestic demand. The World Bank has revised its 2022-23 GDP forecast upwards to 6.9% from 6.5% in October 2022, considering a strong outturn in India in the second quarter, July to September, of the 2022-23 financial year. The Reserve Bank of India has observed that India's GDP for 2022-23 is likely to be 6.8%. India's economy has been remarkably resilient to the deteriorating external environment, and strong macroeconomic fundamentals have placed it in good stead compared to other emerging market economies, the World Bank has observed. India's economy is relatively insulated from global spillovers compared to other emerging markets. This is partly because India has a large domestic market and is relatively less exposed to international trade flows. The report finds that while a 1 percentage point decline in growth in the US is associated with a 0.4 percentage points decline in India's growth, the effect is around 1.5 times larger for other emerging economies. Analysis for growth spillovers from the EU and China also yields similar results. India's external position has also improved considerably over the past decade. The current account deficit is adequately financed by improving foreign direct investment inflows and a solid cushion of foreign exchange reserves. India has one of the largest holdings of international reserves in the world. Policy reforms and prudent regulatory measures have also played a key role in developing resilience in the economy. Increased reliance on market borrowings has improved the transparency and credibility of fiscal policy, and the government has diversified the investor base for government securities. The introduction of a formal inflation targeting framework during the past decade was an important step in lending credibility to monetary policy decisions. The report notes that both levers of macroeconomic policy, fiscal and monetary, have played a role in managing the challenges that have emerged over the past year. The Reserve Bank of India, in its latest Monetary Policy Committee review, maintained that on the domestic front, real gross domestic product increased by 6.3% year-on-year. In the third quarter of the current fiscal, economic activity is exhibiting resilience. In the agricultural sector, a pickup in Rabi sowing, 6.4% higher than a year ago. It is supported by the good progress of the northeast monsoon and above average reservoir levels. Activity in the industry and services sectors is in expansion mode, as reflected in purchasing managers' indices and other high-frequency indicators. Aggregate demand conditions have been supported by pent-up spending and discretionary expenditures during the festival season, although their evolution is somewhat uneven across sectors. Urban demand has remained buoyant and rural demand is recovering. Investment activity is in modest expansion. Merchandise exports contracted in October after an expansion for 19 consecutive months. Growth in non-oil, non-gold imports decelerated. Overall liquidity remains in surplus, with average daily absorption under the Liquidity Adjustment Facility at 1.4 lakh crore rupees during October to November, as compared with 2.2 lakh crore rupees in August to September. On a year-on-year basis, money supply expanded by 8.9% as on November 18, 2022, while bank credit rose by 17.2%. India's foreign exchange reserves were placed at more than $560 billion in December 2022.